All right, so I just picked you up at the airport. We were supposed to go meet Connie today and discuss some offers. And she texted me about 5 minutes before we landed saying that she had a death in the family and asked for us to just send in text her offers. She also said that she met with a realtor yesterday and they have a strong lead for her as well. So I don't really know what's going on with that. We ended up coming back to your house to discuss this. So is this something that you've had to deal with in the past?
Yeah, I kind of I don't know. I could tell on the call the other day that we had with her, she's kind of like, well, I got another investor looking and I've got this. She's just got a bunch of hooks in the water. And so I want to try to get this locked up. I feel like there's a deal here, but I don't feel like we can pay $100,000 cash without taking a larger risk than I'd like on your first deal. But for this, I would have much rather met her in person. Like, it was really important for us to sit down with her in person because we talked through these 3 different options, like an ABC offer. And one of them is investing in her and letting her do the project.
But what's an ABC offer again?
So an ABC offer is like, we have 3 different options that the seller can pick. So instead of saying, here's my cash offer, and they say yes or no, those are the options. Now, if I give an A, B, or C, like 3 different choices that they take, ideally what I do is I say, it's A, B, or C.
Okay.
It's not D, no. It's which one is the best for you to work with us. So sometimes you can do this with like a cash offer and an owner finance type offer. So maybe it's a subject to offer and cash. So where cash is like, maybe you're offering $100,000 cash, or you can pay $125,000 if you take it over, like you take over the mortgage and do it a subject to the existing financing. So I always try to show them a couple different offers. If people are a realtor, they can do, here's my cash offer, or I could list the house for you and we sell it on the open market. Like this, so there's a lot of different options that you might see. I'd rather give somebody options than just yes or no, here's my cash price, and it's way less than what you're asking for. So she's asking for $100,000. If she gets that, she'll walk away from it. She said she would do it. It's interesting because she's an investor, so we still don't even know if that's true. Like, we're operating off the fact that if we brought her $100,000, she's told me twice now that she would take it. So what I want to do is I want to figure out how we can get her to $100,000 or more to make this offer attractive to her. So let's like write it out and just come up with our 3 different offers. And this is what I would do. If I was sitting down with her, I would write it out to show her what she could potentially make on this and what the benefit is to her. So let's do that. So we know she wants $100,000, but we ran the numbers. We've already done a video on this. If you guys missed it, you can check it out right here. We talked about our cash offer being $85,000.
Max.
Okay, so I'm comfortable with that. $85,000 is our cash. So that's all cash offer. She walks away, we take the property, we do whatever we do with it. If we make money or lose money on it, she has nothing to do with it.
Correct.
So she can walk away. It's $15,000 less than what she's wanting. And I would say plus, like, we'll take care of all the closing costs on the purchase. It's not a lot. She owns it cash. We're not bringing in mortgages and stuff like that. So it's pretty easy. I think we'll be fine at $85,000. There's definitely margin for profit. It's a good option.
Okay.
So the second one would be like her partnering with us. So we talked about this. We buy it. She partners with us, where she could share in the upside over whatever we want to make. So I talked to her about that on the phone. She said, that sounds like it could be interesting. We want to make $30K.
Yeah.
Right? So if whatever we make on top of that, we have some options. We can give her a higher percentage, a lower percentage, a 50-50 split. We can give her all of it. There's a lot of different options that we could do here. So let's look at this option with her partnering with us. Okay. So we'll kind of like write it out. So we looked at it beforehand. We came up with an idea of $75,000. So we want to make it her getting money up front, like less money up front, but also sharing in the upside on the back end. So if we run these numbers backwards, and then what I was thinking is we make $30K and then we split 50-50 anything on top of that. So if we make more, we make $60,000, then we're gonna make 45, she'll make 15. So if we run the numbers based on this, let's say our ARV is 200K, which we thought it would be. We're buying it for $75,000.
Yep.
Let's say we put $50,000 into it, and then we also take out 30K for our fixed costs, so money, interest, closing costs, realtor fees, all that stuff. So that's 15% of the 200,000. So 15% of the ARV, and we'll use that in any ARV that we run. So that is 155, and then we add in our 30K of profit. Now we're at 185. So we're splitting $15,000.
If it sells for 200K.
If it sells for 200, we're splitting 15K. So she would make an extra $7,500. Okay. Not that attractive, right? Because she's got 75,000 plus 7,500.
Yep.
So now she's at 82,500. If she was here, what I would do is say, you think it's going to sell for 235. If we agree on that, then now I've got $235,000 it sells for, right?
Yep.
And so we buy it for $75K. We put in what I think to be $50,000. Let's say we have $32,000 for closing costs. Let's make it 35. So 15% of 235,000 is what? 23.5 at 10% plus another 11.7. So it's about that, 35,000. That's about right. And then our 30,000 profit. So now we're at, let's see, that's 110, 140, that's 190. 190,000 minus 235 is an extra 45K.
So that's 22.5 per person split.
Yep. So we split that in half, 22,500, and it gives her a number. 75,000 plus 22,500 is 97.5.
Almost exactly what she wants for this.
Yeah, a little bit less than what she wants. So now what we would do is look at 85,000 cash, 97.5 on a partnership with us.
Yep.
And now the next thing that we have to do is what if we partner with her, right?
Okay.
So if we partner with her, and let's just run her numbers, which is what we're going to do here. So we run her numbers, 235,000, right? And let's say we buy the house for $95,000. So we give her $95K, and remember, we're not buying the house. We're going to put a promissory note and a mortgage on the house, so there's no front-end closing costs for her and us. We're partners. So we got $95,000. We add in the rehab cost of $40K, and then let's add in closing costs for her. Now we're not including money costs here. So it's just the 6% realtor fees, it's some of the, so it's probably 10%. So let's add in 23,500. So now we're at 95, let's see, 135, 158,500. So what we've got here is 235,000 minus 158,500. This is gonna be a challenge for me.
Is 76.5.
76.5, I was close. So she's gonna get 95,000 plus half of that. What's half of that?
38,250.
Okay, can you add that to 95,000?
Absolutely can. That comes out to 133,250.
So if we do this, she's making 133,250. So that's what I would show to her at a meeting. You have an option to make 85,000 cash, 97,500 partnering with us, or 133,250 if we partner with you.
Yeah.
And I think we can write it out here, and then I think we say, hey, I'd really like to get together with you. I'd really like to meet with you just to talk this through. And then let's see. I mean, if we spend a lot of time on this, let's try to get the deal done.
Yeah.
So let's write it up and send it to her.
Okay.
All right, I wrote it out. Here's what I put. Hey, Connie, here are the 3 options we were going to discuss with you today. It's a challenge to write this out and get all the details across, but I'll do my best. Cash offer, $85,000 plus we pay closing costs. Option A. The second one, option B, cash to close and you partner with us. $75,000 plus closing costs. Anything over $30,000 profit, we split 50-50. I estimated at a $235,000 sale. I gotta fix something. At a $235K sale price, we'll split an extra $45,000 for a total dollar to you of $97,500. Option C, we partner with you, you flip, and we bring cash on a deed of trust, $90,000 note with the deed of trust. We split the profit 50-50. At a $235,000 sale price, I estimated that you would make $128,500 total. This would allow you to use $40,000 of our money to do the rehab and take $50,000 to use at your farm as well as profit the most from the deal. We would be happy with either option. Let me know which one works best for you. If you want to sit down, I'm just gonna put, if you want to sit down in person, we'd be happy to talk through it in more detail. Let it fly. He didn't even read it.
I trust you, blindly, clearly.
All right, so hopefully on the next one, we've got an offer accepted and we're raising money for it because she's probably gonna want to close fast and we need some cash.